This is obviously not your first Christmas around trading, but how do you take it? And are there anything that you're watching close during this time?
Yeah, I mean, a lot of my focus is with the dollar pairs. I am a bear on the DXY. So for me, everything looks very bearish. So for pairs like Euro USD, gold, silver, my attention is more on silver, but I will touch on gold. But particularly Euro USD, if I can see that continue, I'm expecting DXY to potentially reach these lows here, just underneath 100 longer term. So if that's the case, if we're going to see that trend continue, I'm looking at buying Euro USD back to those kind of corresponding highs around 1.12. So I'm looking for the break of this high, which we're just coming into now around 1.1. We came in really hard last week, but we failed to break through. I'm being hesitant to look to buy Euro USD because I want to see the trend continue. I want to see higher highs. I want to see higher lows. I want to see momentum continue to push us higher. And if we can see that, if we can see a nice pop above the high there, that'll tell me that, okay, this 4H trend's back bullish again, dollar's weak again, and now we're breaking through resistance. I'll be more than happy to look for pullbacks and continue to buy this. And if my analysis is correct, we've still got a pretty long way to go. Another 200-ish pips there to that target. So there's still some mileage left for Euro USD. So I like this buy setup here if we can break through the highs. And with gold, I'm not really liking the price action of gold. It's been quite choppy. It's quite choppy, so I'm not really so inclined to buy it. And also at the current prices as well, we're kind of resting around that all-time high resistance, this big old level here. So I'm not really too keen to pick up gold at these prices. Silver, on the other hand, is a little bit further down. It's got some room to work with. I'm kind of expecting similar moves for both of them. So I'd rather put my money into silver, which has got a bit more room to work with, than gold, even though I do see gold eventually breaking through that resistance and coming back to the 2150 level there as well. So for me to be interested in gold again, I want to see some strong bullish momentum like we saw last week, breaking through the highs there, start forming a nice healthy trend again, and then I consider looking to long gold. But like I said, most of my attention will be on silver anyway. But in terms of the Christmas question, yeah, I'm kind of starting to tailor off my trading now at the end of this week. Of course, next week we've got that kind of period between Christmas and New Year's. So I'll be taking that time off to kind of reflect, go over my trading performance for the year, looking to adjust, tweak, and set the plan for next year. Again, we could probably see some nice moves in next week, because I remember last year we actually did see some nice moves on the yen pairs at that time. So there is still room for some opportunities next week, but I'm more than happy to take that week off to kind of reflect, adjust what I need to make myself more efficient trader, risking less for more profit, or take less trades and achieve the same profit, something like that. So I'll be focusing my risk management going into next year. But yeah, that's the plan.
That's great. And I think, that's something for a lot of the audience to hear is, if the idea of not being able to trade disappoints you or it bores you, or, it is something to consider. At the end of the day,
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert trader signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
Step away from the charts if you have that impulse, because trading when you're bored is really dangerous, especially when there's like very little volume. You mentioned gold being choppy. I know probably half of our audience watches trades gold, and here's an hourly chart, and it's like, do you really want to be trying to force stuff in that kind of price action? It's just really choppy stuff. And same thing with the 4-hour chart. I've had a hard time really finding any meaningful moves outside of this one big Fed day. And then I pointed out my shortcomings with gold recently. I've been very bullish on it, but still I've been right, but my entries have been really poor and I've missed out a couple different opportunities. So I was super bullish on gold following this day, figuring that we would get some pullback. I'm sorry, some follow through, but I wanted to see the pullback first. We didn't get 2000 and price has left so far, but I do think that it is, like, as you pointed out, it's very choppy. It's possible that we see a little bit of consolidation, and perhaps this kind of kicks back up in the new year. Maybe you start to see some volatility, and in that case, maybe there's an opportunity to find gold longs and still capture it. But I definitely am on the same page. I'd like to see this thing have a little bit more follow through, clean price action before I get involved. Another pair, you mentioned the yen last year during this time. Very interesting chart right now because from a fundamentals perspective, the idea basically is you've got the Western world looking to cut rates to kind of now that inflation seems to be coming down in a meaningful way. We see a lot of central banks talking about cutting rates, etc. Bank of Japan not necessarily looking to, well, definitely not looking to cut rates, but has even toyed with the idea, some members, about raising rates. And that has obviously caused some real strengthening in the Japanese yen, which is why, we see the dollar yen trading lower here. I think this is one of the more technically good looking charts out there. And it just goes to show that despite holiday season, if there's a true change in the story, the market will still trade off of, that idea of what could be coming for next year. So I think if I'm watching the yen off the daily chart, I'm not in any rush to enter trades, but if this market takes out the lows, I think the yen pairs could actually see not just dollar yen, but yen pairs across the board could see some serious volatility off of that. If the major one, the dollar yen, takes out the previous lows, that could be kind of a leg lower that causes pretty much all the yen crosses to move. Marco, you mentioned possibly adding a pair. Would you ever look at dollar yen?
Dollar yen, no, I would kind of try to find something completely new. So something that's not connected to any of my 6 currencies. That's why I said gold, right? Or maybe an indices or something. So I kind of want to diversify because most of the time, if I get a move on, let's say, the dollar, these 3 are going to move. Or if I get a move on the yen, these 3 will move. So I want to add something that will move that's not connected. Well, gold is connected to the dollar, but again, it's kind of not connected to all the 6 of the Forex pairs. So it's really interesting to me. Maybe the S&P or something like that. Never really researched that too much. So I'm focusing on new entries on the current currency pairs. But what I wanted to ask, so the US election is going to be this year, right? The next year. So how will you approach the US election? Because during that time, there's like a quiet period and then there can be a lot of movement, correct?
Yeah, and you talked about potentially adding an indice to the mix. I traded the S&P 500 this year quite a bit. Some very correctly, some incorrectly. Obviously, in recent times, I've had a really good trade, but I was very early to that idea. Part of the reason I was so bullish, Marco, was because of the funny games that get played in politics. I mean, I think that it is a fair thing to think that, well, starting November 1st, on the dot, we saw a massive stock market rally at the end of a presidential's term ahead of re-election campaign starting. That's also during seasonally the best time of year for markets, and this is something that I think you can't discount. Seasonality is not it's a real thing. It's a real powerful force in markets. It's not fairy pixie dust or anything like that. Seasonality is straight up an observable pattern that occurs in markets. If you're a technical trader, seasonality is a very easy jump between the two, between fundamentals and technicals, because seasonality just makes straight up sense. It's a pattern recognition, just like trading technicals would give you. It's the idea that, look, the S&P 500 on the last 10 years, right, historically moves higher in November and historically moves higher in December. So that was why that was one of the main core components to why I look to get long. What's not shown here, and what's an even more powerful force is, you want to talk seasonality, you've also got fourth year of a presidential term is historically a really strong time for stocks. Go figure. If any of us three were the president of the US and we're trying to go get reelected, we want that stock market up, because nobody wants to look at their 401k and say, this president sucks because he's not making us any money in the 401k, right? So it's a really simple, doesn't matter Republican, Democrat, liberal, conservative, doesn't matter. The point is, you're a human being. You want to win a re-election, you got to make that stock market look good. So that was the basis. That was the fundamental idea behind my S&P trade, and why I think it was the monster trade that it was. Of course, I was early, and had I listened to Seasonality, I probably would have been much better off in August, September, and December. I'm sorry, in October, where I had really terrible trading months. Anyways, that you mentioned indices, so I do think that it's worth considering Seasonality. They're very strong factors when it comes to indices, especially, but it also reflects in gold and currencies, etc. Seasonality is a really cool, very simple indicator that I think is worth looking into. But yes, politics play a huge game in indices. And while I don't care too much for politics, I do try and keep an eye on what does move the markets, because that's obviously what all three of us care about. So. I don't know. I guess, Miko, when it comes to indices, I do want to ask, I was going to ask both of you guys about this, but we'll go to Miko first. S&P, NASDAQ, Dow, I'm out of my trade, so you won't hurt my feelings if you say this thing looks overbought. But what do you think? Do you think it's due to pull back? Do you think it keeps going higher? Do you have any thoughts on the indices?
Yeah, I mean, with US 100, US 30, these guys have created new all-time highs. So typically when I'm trading, like the FX markets, when price creates new all-time highs and new all-time lows, that's normally the time I step away, because we've never hit these prices before. I don't know how price is going to react. Are we going to keep going? Are we going to suddenly reverse quickly? So normally when we do that in FX pairs, I step away. And with indices, of course, it's a bit more of a trending market. FX is normally up and down for years and years, but for S&P 500, that one hasn't created new all-time highs yet. So I still do see more room to the upside, because they tend to follow one another. If one's going to make an all-time high, typically the other follows suit if they haven't done so already. So I do see more upside for S&P back to the highs. So if I had to trade one of them, it would be the S&P 500, because we haven't created new all-time highs yet. There's still room to the upside to do that. 48.20, US 30, we've already done it. US 100, we've already done it. So I would quickly just stay away from those pairs. But if I can find some buy opportunities here, that would definitely interest me. We've had a pretty sharp correction there, so I'll probably see how that kind of settles. But if you can place some type of higher low somewhere, that would be an interesting setup. But yeah, it is quite overbought, so I wouldn't be surprised if you do have a bigger pullback, but I do see more upside still.
Okay, fair enough. Yeah, and I guess, Marco, if you were to look at any of the indices, NAS 100, 30, the Dow, S&P, would you start with S&P? Would you look at Dow, NASDAQ? Each one of them has their unique flavors. It's like walking into an ice cream shop for me.
So let me take a look at the S&P then. Yeah, so on the 1 hour, I'm seeing this major bearish leg right here. So I would not be surprised if a correction follows, but not a big one. I mean, let's go up. So this is looking like a very, very strong uptrend to me. And if it creates new highs, then I would just expect it to crush through and continue. Because I think with stocks, I read Jesse Livermore's book, and he said when there's an all-time high in stocks, usually most people start selling because they panic, but then it explodes up. So I would not be surprised if this kind of continues heavily pushing up. Like
it's
this.
A very different market in some ways than FX, because
for sure, yeah.
Because to your point, a breakout, and that book is dead on, because when you get a breakout through the all-time highs, everybody gets a news notification like, hey, stocks are strong right now. And suddenly it creates the herd mentality. And the other thing, I pointed this out a lot, and it's one of my theses why I think the S&P 500 can keep going. I am, looking for now a pullback, but I think it could keep going because there's a lot of people who have been parked on the sidelines during these last few years. Markets have been really scary. Things have been pretty, we had Russia, we had invading Ukraine, we had COVID-19, you had, oil prices skyrocketing, and Israel and Hamas. I mean, there's just so many things that are keeping people scared of touching the markets. And suddenly, the Fed cutting rates looks really optimistic. And you have a lot of people who were very heavy in cash. And so money markets hit like all-time highs, which is, of course, just, a way to say put money in the bank and save it there. So it's really interesting. It could continue to go. I just think I would generally look for a pullback in this case. If we do get one, I'll look to re-enter. And if I miss the all-time high breakout, I think it's all right, because I've caught a little bit of the all-time high. So, but yeah, definitely, Marco. We'll have to get an update from you next time we see you on where you're at with your research, what you're doing, whether you add an index, whether you add gold, whatever you do. You'll definitely have to let us know.
Sure. Then I'll be in the S&P with you. From the
yeah,
bottom.
We can both trade it. Yeah, so my next move is to go all in short on it. I'm just kidding.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.